In this session, we're going to begin looking at the different types of cost classifications or categorizations we can make. There's a number of different ways in which we can split up the different costs incurred by a company. Our first classification is by nature. We're going to see that there are three different categories all the costs of an organization can be allocated into. The second classification will be by traceability. This sounds a bit complicated. Really, it's not. Our third classification will be to split our costs between production and non-production costs. These first three classifications we're going to look at within this session. There is a fourth, which will be slightly different, where we're going to think about our costs by behavior. And we'll look at that classification in subsequent sections. So beginning with our first classification then, cost by nature. As I mentioned, there are three different categories which costs can be allocated into. So the first classification by nature is materials. Our material costs are anything we can physically reach out and touch. So any tangible items we spend money on would be our material costs, like the materials used in the production of our units. Our factory building is tangible. We can reach out and touch it. So it is a materials cost. So our factory building, the materials for our units, and perhaps we would have some machinery as part of our factory operation. These will be all our material costs. The next cost by nature is our labor cost. Our labor costs is quite self-explanatory. This is going to be the costs associated with paying wages or salaries to all of our employees. So it might be our accounting staff, HR staff, and so on. Our final category is simply other expenses. Very simply put, other expenses are costs which are not material costs and not labor costs. So they are not things we can physically reach out and touch. They are not tangible goods we are buying. And they don't relate to the salary or wages paid to our employees. There'll be a large number of other expenses incurred by a company. So for example, insurance costs, phone bills, electricity bills. None of these things are tangible items, they're not materials, and they don't relate to salaries. So they would be other expenses. So a couple of examples then of our other expenses: phone bills, electricity bill, or perhaps if we're paying rent on a particular building. So that is our first classification, cost by nature. We're going to just consider an example now. If we have a cola manufacturing company, we want to think about what costs might be incurred by the company in terms of materials, labour, and other expenses. So, a cola manufacturing company. What might be the material costs incurred for that company? Well, if we start with the basics, we can think about what material is needed to produce a can of cola. Well, if it's a can of cola, presumably there's going to be an awful lot of sugar in there, water, and we'll need to package our cola. So each one will need an aluminium can. Other material costs, if we're producing cans of cola, presumably we'll have some machinery in our factory. We'll have a factory building. And we will probably also have some delivery vehicles in order to distribute all of these cans of cola to our customers. So that's plenty in our materials cost column. You get the idea. Anything that's tangible that we can physically touch is a material cost. We've said our labour costs then relate to our salaries or wages paid. What kind of people would we be paying or employing within a cola manufacturing company? Well, the first group we have, very important within our factory, we're going to have our production line workers. These are the people in the factory involved with assembling all of these cans of cola. We're probably going to have some kind of a factory supervisor overseeing the activities within the factory, maybe a sales manager who goes out to try and get more business for the company, and then other staff like perhaps a finance director, and so on. Moving on to our other expenses, so anything that is not material and not labour costs. Within our factory, we're definitely going to have electricity. We'll probably have some insurance on the factory. It's not material, it's not labour, so we have our insurance costs. The other thing we might have, along with all of our other utilities, in our other expenses column, is a royalty. A royalty is paid if someone else owns the patent on the product we are producing. So if someone outside of the company developed the recipe for our cans of cola, then perhaps we are paying them 5 pence for every can of cola we produce and sell. That is a royalty paid to the person who owns the recipe. It's not a material cost. We can't physically reach out and touch it. It doesn't relate to the salary of one of our employees, so it would be an other expense. Okay, so that's our first classification, cost by nature. We can allocate all costs into one of these 3 categories. Moving on then, our second classification was by traceability. All we are looking at here is how easily can we link each cost to the production of 1 unit of our product. So do we know exactly how much we spend on that item in order to produce a single unit of our product? Our direct costs are costs which can be easily linked to the production of 1 unit of our product. So we know how much we spend on that cost type on each unit. So for example, if we are a table manufacturing company, one of our direct costs would be the wood that is used for the table tops. We know exactly how much wood we use for each table, and we know exactly how much that wood costs us. So it is easy enough for us to know accurately what our cost per unit is in terms of the wood. Indirect costs are costs which we cannot easily link to the production of 1 unit of our product. So, again, if we're in our table manufacturing company, an indirect cost would be our electricity bill for the factory. How do we know what part of the electricity bill links back to the production of 1 unit of our product? Very, very difficult. Again, our insurance cost, indirect. If we have insurance for our entire factory, what part of that insurance cost relates to a single unit? We can't really accurately measure that. So, our direct costs then can easily link the cost to 1 unit of the product. Just a bit of terminology. The sum of our direct costs is equal to the prime cost. Our indirect costs, we cannot easily trace back to 1 unit of the product. Another bit of terminology, the sum of our indirect costs is equal to our overhead cost. So what we'll do now then is have a look back at our cola manufacturing company and decide which costs are direct costs and which costs are indirect. So in our material costs, the first thing we said was sugar. Can we easily link our sugar costs to the production of 1 unit or 1 can of cola? Well, I would argue, yes, we can. We know exactly how much sugar goes into each can of cola, and we know how much we pay for that sugar. So we do know what the sugar cost is per can of cola. Therefore, this will be a direct cost. Likewise, for our water. We know what the recipe is for our can of cola. We know how much water is used per can. Aluminium, we'll use a set amount of aluminium in each can we make to sell the cola in, so we know what the cost per unit is. What about our factory machinery? Do we know what the cost per can of cola is for our factory machinery? Well, I would argue that it is very, very difficult for us to know this with any reasonable degree of accuracy. We buy our machinery, perhaps at the start of this year. We estimate it'll last us 10 years. So it's very, very difficult for us to know exactly how many cans of cola are going to be produced using that piece of machinery. For that reason, it'll be an indirect cost. Likewise, for our factory building. If we take out a mortgage or buy a factory building, what is the cost per can of cola? We cannot link that easily to the production of 1 unit. Delivery vehicles would also be indirect. Moving on then to our labour costs. This is going to be more straightforward. In relation to our labour costs, there is only one type of employee's salary that might ever be considered a direct cost, and that is our production line worker. Every other wage or salary will be an indirect cost. Moving on to our other expenses, electricity. We've mentioned, how do we split our electricity bill across the production of each unit? It's very difficult for us to know what the cost per unit is. Our electricity and our insurance, along with all of our other utilities, will be indirect costs. Now, I've included the royalty cost here for a reason. Royalty costs are a rare example of an other expense that would be a direct cost. If we are paying a royalty of 10 pence per can of cola to the person who owns the recipe, then we know exactly what the cost per unit is. Therefore, it is a direct cost. So, we've done two of our cost classifications, cost by nature and cost by traceability. The final one for this session is to look at production and non-production costs. Now, production costs, for F2 purposes, we can consider them in terms of our factory environment. Production costs are the costs a company must incur in order to produce their product or provide their service. So in a manufacturing environment, our production costs are all of the costs associated with our factory. This is the money we must spend just in order to produce our goods. So we'll note down our definition then of production costs. Our non-production costs, then, are all the other costs. So our non-production costs are the costs which are not necessary for the production of our product. So, in a manufacturing environment then, if our production costs are all the costs associated with our factory, so the factory building itself, the machinery within the factory, the materials we use to produce our units, the labour staff who work in our factory and we need to pay in order to get those units produced, they are all production costs. Our non-production costs are costs that we do not have to incur in order to produce our product. We incur these costs in order to ensure our businesses run effectively and that we are profitable. So our non-production costs will include our distribution costs, so we don't have to spend money on delivering our units just to produce them. However, we are going to have to incur distribution costs in order to get our product from the factory to our customers. Our selling costs. So perhaps we're paying our sales manager a commission for each unit they sell of our product. That would be included in our selling costs. Our finance costs. So this would be things like the interest on any loans we've taken out to fund our business. And finally, our administration costs. Our administration costs will include things like our payroll department. Probably going to have a head office building somewhere that looks after the administration for the company. So a HR department, a payroll department, accounts payable, accounts receivable. They would be part of our non-production costs. Now, why do we look at this split between production and non-production costs? Who cares? Well, one of the primary reasons that as management accountants we look at this split between production and non-production costs is because this information is used by the financial accountant. So, when our financial accountant is doing their profit calculation, at a very high level, we don't need to go into the detail, but if they're doing their profit calculation, first they will look at their sales revenue, from which they will deduct the cost of sales. Now, the cost of sales will be production costs. Subtract that from sales revenue to give us gross profit. Once we've calculated gross profit, then non-production costs are subtracted to calculate net profit. Now, you may have seen profit calculations already in F3, and the terminology might have been a bit different. Regardless of the different terminology, this is how our production, non-production cost information is used.